Good evening. Ira Epstein with your SPDR ETF wrap-up. And this wrap-up is for the weekend. So this is going to be a weekend edition where we deal with weekly charts for November 12th, Saturday, 2022. Wow, what an interesting week. But before I get too far, I want to talk to you about something that I did. I created a special currency report for you. Now, in this report, I covered the dollar index. And when I do the dollar index, I'm doing it because it affects so many things. Think of the headwinds all the corporations have from this. I talk the seasonal patterns. I'm going to deal with the weekly charts, carry into the daily charts, give you what I see going on with the impact, where we're at with it. And I do think we're at turning points. So if you're interested in seeing this, it's really simple to do so. Just take your cursor, move it to the top of the screen here, and you'll see the icon pop up. You can also go to iraepstein.com under research. You can call my staff. Those are the ways to go do it. So the real question that everybody's talking about is this a pivot for the Fed? One set of friendly reports does not make a trend. One set of reports could be a peak in inflation, and it could just be an aberration where you're going like that. We don't know yet. Two reports where you get jobs falling, where you get the core CPI and the headline falling together, that might be a trend. Does that mean we're at a pivot? Let's discuss pivots so you understand this. If you're of the camp that you go, well, the Fed goes from 25 to 50 points and 50 to 75, and they're pivoting up. And then if it goes from 75 to 50 and 50 to 25, they're pivoting down. Okay, but that's not really what pivot means. What it means is the Fed is either raising rates or not raising rates. The pace that they raise rates is not really defined as a pivot by most. It's still a race to get what? To get the market ready for the fact that the Fed isn't going to change what it's doing until this economy gets to the point where inflation disappears down close to the Fed's number. Now, the Fed's number is 3%, 2%. Might it be 3%? It might be. You got to just think of it this way. You don't take the medicine away from the patient just because you had one turn of events. You generally keep giving the patient the medicine to make sure that whatever you're treating gets out of the patient. You take it out too soon, it can flare right back up. That's why the Fed's not going to change anything. Come 2023, if you get weaker numbers in the D's reading, that gets exciting. And remember, the market won't wait for the Fed to do that. Markets like to be about 6 months ahead of the Fed. So that is why you're getting this buying now. People are going, well, you know, something, maybe. Just maybe, by June, they're all through. This is about 6 months ahead. I can make my moves now. I think you'd find yourself a little bit early on that because we don't know. I'm not going to argue that after a weak December set of readings that it's sooner rather than later. But we have to get to the point where we see what sticky means too. So I'm just giving you the whole picture. Does that mean you fight this market? Absolutely not. This was a week where what the market said is, we are ready for bounces. Now, the bears will say maybe you'll go to 4,100 in the S&P, peak out there, and come back down. The bulls will say you're going to have a hard time, just the way you had a hard time getting through the June lows and barely got through them when you did get down there and you came back. It'll be even harder the next time. I get both arguments. And that's why we're at sort of a transition time. But the first thing after you're super bearish that happens is the shorts cover and new buying comes in and it gets the market overpriced. It's really simple. It does it almost all the time. Let's look at Amazon for a change. I'm sorry that we have this little figure here. I'm on the weekend by myself and I need my technician to get rid of that, so it's annoying. I'll bring it up and I apologize. When we look at it, you've come down hard, and we just made this week the biggest break that we've made since going back here in the February-April time frame. Got it? Got a higher high, lower low. That's not a trend. If the market rallies up, the big resistance will be wherever the 18-week average is, and it'll fall from 120.63 a little bit. Could get under the 120s, but that's where the pros will hit the market again or dump stock that they don't want. Now, the closer we get to Christmas, obviously more buying comes in. But I think we saw a failure on Prime Day too. That's my own opinion of it. I don't think it worked in any manner. Now, if everybody feels better about the economy, does that change the holiday season buying? Psychology is a big part of holiday season buying, and I would think the answer is yes. Things are not as dire as they were just 7 days ago with this stock market rally that happened. Where did you go in Bollinger Bands? You're bouncing off the lower Bollinger Band. What do I teach? When you come down to the Bollinger Band, if you're not embedded means the blue and the red are going sideways under a 20 level. The pros cover their shorts. If you go up to the upper band and you're not embedded, the pros get out of longs. That's what I teach in part in my enhanced Bollinger Band. Of course, there's a lot more to it than that. How to enter, how to ride it when it's embedded. It's a whole slew of events, but I'm giving you just the gist here. KBE, the banks have to love this. How could this not be friendly for the banks? I keep looking at this going, okay, the banks, first of all, for most of us, they're not giving us what we should get on our CDs or our small rates. That they can be, and they are, hoggish with it. They little bit of a go to us, thank you, but not what we should get. I mean, 2-year notes are 4%, right? So I'm not seeing that type of, on my CD, are you? Are you seeing on your daily interest? What are you getting for your daily interest now at your bank? You should ask your banker. But when it comes to them lending out money, boy, they're going out with the big numbers. So that's friendly, this. Okay. XLI is in an uptrend, higher lows, higher highs, but I look for a big problem to happen because you're getting, number one, you're using a lot of this momentum, and now you're entering that rarefied area you were in before at the 100-day average to the upper band. I look for the market to have trouble right up there. Is the market out of its bear trend? Absolutely. The materials are liking the dollar. The dollar turn has helped this market. Most materials that are all over the world, a lot of them priced in dollars, my friends. Energy, still looking bullish, okay? No real change in this market on a weekly chart. You're at the upper Bollinger Band. Hasn't given up anything on that. Do you ever buy an upper Bollinger Band? Never. So it's not given on the weekly chart anyway to get in. The daily chart's been full of trouble. On the daily chart, it knocked me out of positions this week for my subscribers. That's okay. Not every trade turns into gold, all right? But they don't have to turn into doo-doo either. FXE, okay, this is where I would tell you, hey, you want to come out against the upper Bollinger Band. Why is copper up so much? Because China's relaxing. It's been relaxing policy now for the past 2.5, 3 weeks. It starts with what? The foreigners coming in, the airlines that are landing, bringing people with that. But behind the scenes, if you read the papers and you read the rumor mill, scientists are saying now they're medical people, come 2023, you're going to see gradual steps to not go back to a zero tolerance, to break that concept down with the own Chinese twist on it. They have to. They're killing their own GDP and they're driving business out of the country. You might think, oh, they're just going to turn inward. They don't care. Oh, they care. But what's the save face thing there? You know what it is. I mean, this is very typical Asian, typical of what's happening. President Xi's in for life for all purposes. Now he can start doing what he wants. He's got his new people all around him. So you look for this. They also are talking more money for the property market. $56 billion I heard on Friday. So you start putting that in there, copper comes into play without question. Gold comes into play. Gold's priced in dollars. Dollars going from 114 to 109. You want to see that report. It's very, very important. Now, would I ever tell you to buy over an upper Bollinger Band on a weekly chart? It's never going to happen. I look for the resistance in ARC. It's finally coming off its lows. You could even argue it's got a double bottom in the $32 area, finally. Okay. It's only lost how much value? It's got to be one of the worst performing funds out there. But it may have run out of bad things. In Apple, you're coming back into the resistance area. You haven't turned the trend on the weekly chart. The daily has come up nicely, But the weekly is just a bear market rally into resistance. Now get over 157.50 and I could then see reasons to no longer be short. But until that comes, I think the pros are selling it between the 100 and the 150, the 100-week average to the 153.41 with stops over that number. In Tesla, this is a cover short area. We saw that how many more billions did Mr. Musk sell? Well, you know, he bought this Twitter thing. Is it going to work? Who the heck knows? It's a pretty expensive experiment as I see it. And I call it his experiment because if you're watching how he's coming out one day with the verification, no verification, let's fire half the staff. No, we're firing too many people. Let's hire them back. I mean, this is mismanagement all the way through. All right. Is it Musk style? To a degree. To a degree. Does he get it together at the end? Richest man in the world, he does. So is he going to succeed this time? You never know, but I wouldn't bet against him. So coming down because he's dumping. Now, what I've said to you about Tesla, though, is more important. Everybody's got an electric car coming out against these people. That's the part I don't like this company on. It was great when they didn't have competition. I'm looking, be it Lucid, Cadillac, Ford, everybody's got electric cars, and there's more and more of them coming. I think the day in the sun, at the price point that they're at, people are coming up to. I keep reading about now the $100,000, the $180,000 range for electric cars. More and more of them coming. Even Rolls-Royce is coming out with a fully electric Rolls-Royce now. Everybody's got one. I question if this is all about Twitter. That's my own point of view on it. Yes, they're a leader, but the up-and-comers, there's many of them. They're going to kick, scrap, they're going to take market share. Meta, was that it for Meta? I don't know. This was a bad week because the rally got me caught on that when it came back up. You know, I don't mind telling you if I have bad times. I have plenty of good times, so they go hand in hand. You haven't lost the embedded reading. Until you lose it, it's a bear market rally. The daily charts, yes, they went up to the 18-day average from the lower band. That's all. When you look at TLT, okay, this is the argument. Is it a pivot or not? Is it the end of the big break in the market where you don't add interest? Well, that's going to be the interesting story. The Fed's going to stay at the short end, and I predict they will have interest rate hikes right through the whole first quarter, maybe the second quarter as well. I feel the first quarter very secure in making that statement. So they're going up a minimum, folks, another full basis point, 100 points, minimum, in my opinion. Okay, but that's the short term. The long term doesn't have to. This could be more important in the 20 and 30-year area. Pay attention to that. Sorry that I got that through and I didn't realize I was there. I want to repeat my currency report. I think you'll like it. So you go to our website, iraepstein.com, or you just take your cursor, move it to the top up here, and with that, all you have to do is give it a click, enjoy it. It's only up for 3 days. Now, another statement for you. I will be holding a webinar this coming week, Thursday. I'll be doing it at 12:30 p.m. Central Time. I'd love to have you there. The invites, if you're on my mailing list, will go out on Monday. Look for them. First come, first serve for you. Take your seats, and then there's only X amount of seats left after that. There's no charge. It's 20 minutes long. I do not post it on the website. You got to attend or you miss it. I'm Ira. You have a good day. I will see you all come Monday.